CPAs, Jamie Hardy and Melissa Brock. Jamie and Melissa are partners at Gruenloh Hardy and Associates. Thank you both for being here with us today. We really appreciate it. They're going to be discussing how to maximize the stimulus package and questions that go along with that. Attendees will be muted until time for our Q&A unless you have a question. I'm going to let Brooke at this time briefly explain how to raise your hand and ask a question. You gotta wait. Okay.
On the computer, you can hit the little hand button that's on the right-hand side by your name, and it'll let me know that you want to ask a question, or the chat feature that's in the middle bottom of the screen. You can ask a question there, or just say you have a question, and I'll unmute you. Or if you're on your phone, you can press *9 to use the raise your hand feature, and I can unmute you from there as well.
Great. Okay. Okay. So now I'll introduce Jamie Hardy. Let's see, Dina, will you mute your sound so we're getting feedback in the office? Okay. Jamie started his professional career in Birmingham, Alabama, with a regionally recognized firm where he focused on financial statement audits and taxation of businesses and not-for-profit entities. After extensive travel to varying states and working with very large accounting department systems, he returned to Baldwin County, used his background to focus his career on consultation, taxation of businesses, and nonprofit entities. When Jamie came back to Baldwin County, he realized that the majority of his new clients did not have large accounting departments, and some might not have a bookkeeper. He began his focus of being their trusted advisor by helping them understand the business process, accounting procedures, production, and reducing their tax burden. And so often he found them, and he still does find them, trying to implement a great idea in their business, not knowing how to navigate the process. The enjoyment to coach them from an idea to a new successful company, making them more envisioned and to minimize their tax burden and develop ways for them to involve their family in their business is his passion. And Jamie, I believe you're going to introduce Melissa
Brock. Yes. Melissa is partner here. She was with me prior to merging with Wayne Gruenloh and forming Gruenloh Hardy and Associates. And she's a partner here, the firm administrator, as well as she handles all of the HR. And you'll see that she is very ingrained in the PPP forgiveness piece of the process. And we're going to see her address some of those later. Also on the call for everybody, make sure that everybody's aware that Yo is on the call, and that in the Q&A side, she very well might pipe in and answer. We love that. And, you know, just from that standpoint, a wealth of knowledge, and we thank her for being here. Okay, I'm going to jump into it, maximize our time. When the CARES package initially came out in response to COVID-19, some of the very first things we saw were smaller measures that they could all agree on. When I say all, I'm referring to Congress, of course. And we're going to talk about some of those, the payroll tax credit, payroll tax delay, et cetera. Then they started talking about the billion-dollar packages, and that's what you hear. There's a lot of confusion between the EIDL and the PPP. I know that Gail has done enough webinars that she's familiar with them in detail. So we're going to talk about where they've been and then where they go to. I want to say that when I refer to the way that it's changed, it's not always SBA changing. Sometimes it's Congress changing. Sometimes it's SBA being limited by funds, even though that there's billions, they have the entire populace to handle. And so there has been changes and morphs, and I will get in a lot of trouble if I don't address it right with Yo. So I gotta stay where I'm supposed to be. All right, so the EIDL program, which is one of the first implementations that came out, was the emergency disaster loans. It was funded initially by $10 billion. The goal of that was to get money in hands of business owners as quick as possible with up to $10,000 forgiveness. That's still the goal of the program. That hasn't changed, but that program has morphed and looks different now than it did originally. Also, originally, you could not, I won't say that you could not have an EIDL and a PPP, but they would be consolidated into one. Hopefully, Yo has maybe an answer for us at the end to address that. But the EIDL program was completely run through the SBA. So in the frame of reference, when you're trying to funnel the entire U.S. populace through a funnel, that's what happened. There's no possible way that SBA can handle every claim in the United States when that was the primary program to start with. Nor would, while 10 billion seems like a tremendous amount to us, that for the whole populace is just a drop in the bucket. So we're going to focus on the PPP and the forgiveness, but I don't want to leave the EIDL out for purposes of coming back to for the Q&A. SBA is handling both programs, but they're handling one by themselves, one in conjunction with banks. The EID handled completely under the SBA covering, meaning that you applied online, and a tremendous amount of people were applying, whether they were qualified or not initially. And the way that the program morphed is literally everybody with a condo, I'll reference it for here, everybody with a condo was applying. Well, maybe that was written in law as looking like the intent, but the intent of the lawmakers was to keep people working, not as a funding for rentals replacement. Even though that might have looked like what it was to start with, I think they had to change that. And what we're seeing now on the EIDL funding is $1,000 per employee. And there is an approval in the background with the SBA, but the approval process takes on a different form because they're trying to make it as efficient as possible. And really what you're seeing, or we're seeing with clients, is if they have 8 employees, we'll see an $8,000 ACH drop in their account for today, and the acronym SBAD. And that's the actual deposit for that. Now, that's based on their number of employees. That wasn't written into law in the first passing. I'm sure it's going to be addressed. It's regulatory in that SBA is having to adjust to make sure that everybody that has employees gets some piece of the money. And the reason is because they want the most employees functioning in the economy as possible, as opposed to trying to replace rents or any other operating expenses for non-employees. Now, it doesn't limit it to you paying for just payroll, or just certain expenses like the PPP does. But what it does is base the actual funding portion on the number of employees. We are also, as of this week, we have seen clients that are receiving both EIDL and PPP. Okay, so we are seeing both come through. I can tell you we're going to have to work that forgiveness out on the back end with the EIDL. I don't know what that looks like. And I don't even know that if Yo can speak on the record to that when we get to that section. That'll be a question that I'll ask, but from her. But in the same sense, there might not be an answer at this time. All right, so let's move to the elephant in the room, the PPP loan program, which that loan is covered by SBA as well, meaning that it's guaranteed by SBA via Congress. They are working with, SBA is working directly with all SBA banks. And those lending institutions that we saw were few and far between the day before they passed the legislation, turned into virtually every bank in the U.S. overnight, just from the standpoint that every bank had to take care of their customers. And we're glad, keep in mind, SBA had to vet them, had to get them on board as an actual bank, and had to get them up to date on SBA lending procedures. So hence the reason for the front end delay from the banks that you were hearing. Likewise, I can say this, I don't think Yo can, but I can say this. I think Congress could have written the bill a little better. There was some, they kicked the can to SBA and said, okay, you figure it out. So that's what they were doing in the initial phase. There has been the first funding of the program through the initial phase, which is the one that we saw run out of funding. And then there has now been a second funding. Out of that first funding, what we saw was, and I'm going to give you some statistics for Alabama so that you can look at it. And this is what's been in the news, and this is what's highlighting the news. But keep in mind, is I'm going to be short and brief here on this piece of it, because I want us to get to how do we forgive the loan. So 74% of the loans applied for were for $150,000 or less. 83% of the dollars were for loans greater than $150,000. So while that might not have been Congress's intent, that's what happened. Very large loans, and when I say large in our capacity with the clientele that we deal with in Baldwin County. So the loans, 83% of the dollars were for loans greater than $150,000, and 68% of those were for greater than $350,000. Now, keep in mind that makes up probably 5% of our client base here. Okay, that was just not the case. Did we do some for very large sums? Absolutely. Were the majority of them small, meaning anywhere? We have done one, as low as $5,000, and we have done them as, all the way up above the $350 considerably. But the majority of them would be between the $5,000 and $80,000 range. Now, keep in mind that $5,000 one, I received another approval this morning on a $6,500. That's the difference between that business being in business or not. That's $6,500. So they're just as important as those $500,000. Alabama as a whole received 1.4% of the total loan dollars. So that's not a large percentage by any stretch, but as far as the percentage of the populace, we've done reasonable in that respect. There was also a second funding that came through from Congress, which is what we're working through now on the PPPs. This is the second wave. What we are seeing, because we jumped on the loans, I can tell you from the time the news broke of the initial law, the next morning at 8 o'clock, we were preparing them. We have 16 people that worked day and night from the start, literally until probably yesterday, doing nothing but loans. In a CPA firm where we do audits and tax and et cetera, we essentially shut down and put a plan together in order to get the most funding from SBA possible into the client's hands. Now, bear in mind, a lot of CPA firms did that as well. That's the reason you're seeing $350, $450 billion go into the economy now. As bad as it is currently, we can only imagine what it would have been if this had not happened. So we're going to bypass, keep going so that we can get to the forgiveness on that, because the key is, I think for most people, I know quite a few people on the Zoom meeting currently, the goal is not a loan. I can assure you Joe Kitchens does not want a loan. He would much rather have forgiveness of a loan. And so that's what we would like to focus on and get Melissa in here. Now we're going to move to the stimulus check piece. That is the one that headlines the news the most. Why? Even though it's less money individually, it's more money as a whole, and it affects the most number of people. That's the $1,200 per adult that filed tax return, $2,400 for married filing jointly, and then $500 for children below the age of 17. That's the key. Watch that children below the age of 17 number, because we're getting quite a few calls on children that are above the child tax credit level that are saying, where's mine? It's the parent obviously saying, well, where's my child? I have one of the children in that tax bracket that's, not going to receive that $500. Likewise, there is funding caps, and it graduates out based on your adjusted gross income. For Baldwin County as a whole, the majority of that, most people will receive funding because in the economy we are, there's not a tremendous amount of married filing joint tax returns that we do that are going to be 200,000 plus income. And when I say not a large majority, I mean obviously not 50% or more based upon our current economics of what we have here in Alabama. And the IRS, as of this weekend, they had shut down for a few days, but they have updated their website for the Get My Payment. You can go to IRS, just Google irs.gov and then Get My Payment. It'll take you to the link. There's some additional items. It was kicking at least 50% of ours out, saying unrecognized, invalid, etc. That's changed. Now it is recognizing them. It's asking you for your information. You have to have numbers from your prior year tax return because they have to verify it's you. But there are extended pieces of that website now that will let you see where your payment is in process. If you didn't get it, it does not mean you're not going to. You could be receiving a paper filed check. I don't have direct deposit on mine personally. Well, if I don't have direct deposit on mine, I'm automatically left into the mail a paper check category unless I go online and provide them that information. So this is also on the stimulus check side. It's an advance credit. A lot of people are getting confused. It is not an advance of your refund on your taxes for 2020, meaning if your refund was normally $2,000, everything stayed the same, you're still going to have a refund of $2,000. You might have received an additional $2,400 credit for married filing jointly, but it's not going to be a reduction of your current refund. And Melissa jumped in, so I might have to, she might disagree. You agree with that?
No, that's correct.
Okay. All right. And then the next one we're going to move into is one that's not talked about a lot, but I'm telling you, it's going to be affecting people in Q2, quarter two, dramatically. And Melissa's going to talk about that, and that's the payroll tax credit piece. This is one of those that came out first. That's all you, Melissa.
All right. So they are allowing, because a lot of people have not been able to go to work. There's various reasons for that, but they came out with a sick or family leave credit. So just a little background on these credits. Someone would qualify for this sick or family subject to a federal, state, or local quarantine or isolation order if they've been advised by a healthcare worker that they need to stay home because they're displaying certain types of symptoms. If they currently are under a COVID-19 diagnosis, or if they're having to care for someone that's subject to any of the above. But additionally, which this is the one that seems to hit most people, is if they have to stay home because they're caring for a child whose school has been closed. So this hits just about everybody that has dependent children in school. And what they're allowing is we have sick or family leave. The sick leave is 2 weeks of leave that basically the employer would go on ahead and pay the wages of the employee subject to certain limits, and then they would then be eligible to take that as a credit on their Form 941, which is their employer payroll tax forms. So say, for instance, that we have an employee that needs to stay home to care for her children for 2 weeks. Then we would go on ahead and pay her wages as normal, but then we are going to receive a credit for that when we file our Form 941 in the form of payroll taxes. So, and that's a 100% credit up to certain limits. So to kind of to
or you're staying home to care for someone else. If you're staying home for yourself, that credit, you would be entitled to 100% of your normal pay up to $511 per day. And that is the amount of credit that the employer would then be eligible for if they were to, if they're paying for that sick leave. If you are staying home to care for a child, which I think most, that would be the most applicable one here, you're going to be entitled to 2/3 of your normal pay. And their 941 return. So
Melissa,
basically,
you broke up on me for just a minute. Did it break up? I don't know if it broke up on everybody, but essentially what you were saying, let me make sure I got that right. On children, if you're taking care of children, so if you have whether it's a 2-employee company or whether it's a 50-employee company, if
right.
somebody takes off and takes care of their children, then the company pays them. The company is entitled to a credit for 100% up to the 2/3 pay. So if the 2/3 was, in their particular case, was $600 a week, then the company would get a credit dollar for dollar whenever they file their payroll tax return.
Correct. So it's almost like the government is making that payment kind of on the back end, is paying that salary on the back. I'm breaking up again, aren't I?
You are. But basically what she's saying is the government is essentially paying it, but they're paying it through a different way as opposed to paying it through unemployment. They're using the employer to handle the paid time off, so the employer is not having to foot the bill for these children that are having to stay at home. This is not unusual, just so everybody understands. We're seeing this in our clients. We're seeing this, we're even seeing this in our firm, okay?
Right.
So this is real life examples of what's happening. And I think this particular one is being overlooked in lieu of the loans in a lot of cases. So you might have someone that's taking they're trying to do a part-time job, stay at home, and to take care of their kids and juggle homeschool and juggle all this. This is a provision that can help that.
Correct. And as we said, it's going to be taken when you file your 941 return. So some companies are making federal tax deposits, increase the amount of that federal tax deposit, which kind of gives you an immediate influx of cash if you're not having to make those large payments monthly. And then some people actually even make those payments weekly. So that's definitely a huge influx of cash if they're able to decrease those federal tax deposit payments that they're making. And then that is, there's two portions of that. There's sick leave and then there's family leave, which the sick leave is for 2 weeks and then the family leave is for 12 weeks, but you don't pay for the first 2 weeks of it. So really it accounts to a total of 12 weeks off that you're able to, give your employees if they need to stay home for children, or, obviously if they're having the COVID-19 symptoms themselves, that you're still able to pay those employees and still able to get reimbursement on the back end for that. So there is one additional type of leave as well, and this is more just if the company is maybe not open, or if they're open enough but they don't need all their employees, you're also eligible for a 50%. So say the employee doesn't qualify for the sick leave or the family leave, you are able to receive a 50% credit for wages if you're just paying an employee that just has to stay home. You don't have the work to give them. There's no reason for them to come to work. There's still a 50% credit for that. So say I'm paying an employee $600 to stay home for a week, then I will be able to receive a $300 credit for that, and that's up to $10,000. So that's something additional there for people that they just don't have the work for the employees right now, but they still do want to keep paying those employees. So that's something that they're still eligible. That's again received in the same way on the 941 federal, the payroll tax returns. And again, by decreasing the deposits and that kind of thing is how you're able to immediately get a little bit of influx of cash from that. All right.
So a couple other items that we
Again,
do not necessarily recommend. A couple other items that we don't necessarily recommend, but I can tell you that they're out there and you're going to hear about them. One is a payroll tax delay. And that just means where you can defer a certain portion of your payroll taxes that is not necessarily a credit. It's just deferring to keep cash in your pocket. You're prolonging, unless your business is going to shut down, we don't recommend this one because you're prolonging the inevitable that you're going to have to pay this. We have a major concern that this is going to back up like people do with credit cards. You do not want to owe the government payroll taxes. They are going to have to come back to get those. Now, that said, they're not subject to some of the normal payroll tax collection procedures that is in the normal process, but we still are just cautioning people in that regard.
Can you hear me? Am I?
Yep.
Okay, so I'll say on that, so assuming that you're not taking advantage of any of the other credits that we discussed, that this is just a way to delay paying some of the payroll taxes, but this is only eligible for the employer portion of taxes. So you have, when we're talking about the credits, you're talking about not having to make deposits for, you know, the employees' federal withholdings that are coming out, the employees' Medicare, the employees' Social Security, all of that, you're not having to make the deposits for. On this side, it's only eligible, it's only, so the employer's Medicare, the employer's Social Security portions, those are the portions that are eligible for delay. And they give you actually a fairly long period in which to pay them. So the first 50% of it's going to be due at the end of 2021 and the second 50% at the end of 2022. So if a company is just, they're really hurting for cash right now, this is a good way to keep some of that cash now. But we don't recommend waiting until the end of 2021 and 2022 to make those payments, because you're going to end up with just these huge, these large amounts of payments due at that time. So even if you do want to go on ahead and take advantage of that, just because you really need the cash at this moment, that you still go on ahead and try to make the payments as soon you don't end up with these large balances due, because that could hurt then. So
Jamie,
The last one is a sales tax delay, and there's a delay at the state level, and at the county level we have received confirmation that they are also delaying it, not necessarily on all the local municipalities. Because sales are down, we're also not recommending you delay those. If sales are down, it's not saving you that much in tax to delay it. And we just feel like there's other sources for larger amounts that can either be loans or grants, as well as just other cash flow options that are better suited for most people. Likewise, keep in mind that even if the local or the Baldwin County is allowing it, that does not mean that it's not hurting them. They are also running low on funds, or they are using reserves, I assure you, because the tax base has drastically decreased during this time. Another cash flow option. I'm sorry, go ahead.
So the Alabama payments are not currently required to be made, but the returns do still have to be filed. So I do think that is one thing that people have gotten a little bit confused about. Even though they're not requiring the payment to be made yet, you do still need to file that return, or you will be subject to penalties for that portion of it. And I don't think that Baldwin County has officially put out anything saying that it is delayed, but I did call them and I personally spoke to them, and they said they are following what Alabama is doing as far as Alabama's allowing for the payments to be made in arrears, that Baldwin County will follow what Alabama is doing. I didn't go and contact every single municipality, because those amounts get to be so small. I think it would be better for, just to go on ahead and make that payment if you're able to. And really, as he said, the only reason we would recommend this is if you're really low on cash and you need to make it. We don't want the company to go out of business to make a sales tax payment, but if you have it, there's other funds where you can get it from. So if you're able to get it from elsewhere, that would be best, but that this is definitely an option if you're, you don't want to go out of business to make that sales tax payment.
So then we'll talk about other cash flow options. Of course, banks are tightening lending restrictions. Obviously, there's a tremendous amount of our clients have lines of credits, home equity lines of credits, business lines of credits, et cetera. Of course, we encourage those to keep the business running. Another cash flow option that, nobody tends to talk about, that we always forget that's there traditionally, is a conventional SBA loan. And those SBA loans are through approved lending banks. Those rates typically range from 5 to 10%. Of course, we're seeing, of course, the lower side. Those do require collateral and personal guarantees, but they have maximum limits of, well, they can go higher than $350,000, but standard is $350,000. And we just want to make sure that people don't forget that the SBA has those as well. Because I think people tend to look towards the payroll forgiveness piece, the largest amount, and they tend to forget there's traditional lending through SBA as well. The next and last piece that we'll talk about is the forgiveness of the PPP loan. We won't talk about the EIDL forgiveness because with it being in flux, unless Yo mentions it in a minute, but Melissa's going to talk about the PPP loan forgiveness, and she is actually heading up that. Let me tell you that is extremely complicated. It is not what it sounds like in the news cycle at all. So please be aware, all the businesses, that it's extremely complicated, to make sure we're involved and that we're calculating it, because it's too late on 8 weeks and a day to fix it. In fact, it might be too late in week 5 because you might be too far through the process in order to catch back up. So you got that, Melissa.
All right, so the PPP loans originally going to be calculated on 2.5 months. Oh, that's correct. Yes. So when we look at the forgiveness portion, we're looking at really the moment that it kind of hits the bank account is when we're going to start with the calculation of doing that forgiveness. And generally it's the moment that it hits the bank account, but if you're a business that's closed down, then it doesn't necessarily have to be then. We can go a couple weeks forward with that. So there's some different things that go into that, but generally it's starting the moment that it hits your account, and you're going to be looking at the next 8 weeks. First, you're going to be looking at, obviously, your payroll. Your payroll needs to have maintained about the same levels that it was maintaining during the period where we did the calculation. And that payroll has to end up being at least 75% of that loan amount in order for that full loan to have been forgiven. So if you got a $100,000 loan, your payroll during that 8-week period needs to be the $75,000. Additionally, there's a calculation where we're looking at full-time equivalent employees. So there's a couple of look-back periods that you look back and see what your number of full-time equivalent employees usually runs, which, if full-time equivalent is, they're looking at it at about 30 hours per week. How many employees do you have that are working 30 hours? So if you have 2 employees that work 15 hours per week, that would be 1 full-time equivalent employee. So you don't need to have dropped your level of full-time equivalent employees, or that's going to end up coming into account where only a portion of your loan would end up being forgiven. So that's something that's really important to watch during that 8-week period, to make sure that we're not dropping below that. So that's a good reason where he was talking about it's too late to look at it it's really too late, in my opinion, to look at it at week 7. You need to start watching this at week 1 to make sure that you're not dropping below and that you're making the corrections needed if you have dropped below. So that's why it's really important to have someone helping you look at that to make sure that we don't want to end up with, 85% of the load being forgiven, or because we didn't realize we dropped one full-time equivalent employee. So that's one thing that's being looked at. But additionally, what's also going to be included in that loan forgiveness is we have the payroll, we have any benefits that you're paying for the employees, like the health insurance, that kind of thing. But then we're also looking for mortgage interest and rent and utilities. So there's several other things that get included in that calculation, which again is why it's a good idea to be watching this throughout the 8 weeks, because we have to make sure that we get up to that full loan amount. So you really need somebody working with you to watch those different numbers and make sure that we're going to end up being there at the end of that 8-week period. You have anything else on that, Jamie?
Well, the only thing that I would say is, a lot of people are paid bi-weekly. And
Correct.
so, if you look at a traditional 8-week period, you're going to have 4 pay periods. Well, if you look at the right 8-week period, you might end up with a 5 pay period cycle. If you look at rent, when your rent's paid, you could end up with a 3 rent cycle. Those type things can help in the forgiveness. I guess the biggest thing that we see is a lot of people are going, well, counting me, I have 4 employees, and so if I lost one, I'm still at 75%. But what they did was, they lost one that was working, 40 hours a week, and everybody else is working 20 hours a week. They're not meeting those equivalents. And so there is going to be an issue on the forgiveness, and I think there's going to be a lot of clients that are surprised that all of a sudden, this quote free money they received is really now going to be a loan. We were 100% focused on getting the loans in people's hands. We are now 100% focused on making sure that the maximum amount of forgiveness is allowed.
Right.
That's key. And then so you think about, for instance, we see a lot of it in the realtor side. A realtor has a self-employment, they have a Schedule C. They don't have any employees. They still qualify. In most cases, they're still going to qualify for this loan. Well, they receive, for instance, let's just assume they receive a $20,000 loan, but they have no rent. They have no mortgage interest because they're working for their home. They could have utilities, potentially, telephone, et cetera, that could be included depending upon the definition. But we're looking at their forgiveness is probably going to be more like 80, 81%. They need to know that on the front end, that 100% of theirs is likely to not be forgiven. Do I have that right, Melissa?
Yeah, so just to speak to that, so when the original calculation is done for self-employed individuals, you're looking at about 2.5 months of their 2019 income, and that's the amount, their net income, and that's the amount that on the back end, when you're actually doing the calculation for the forgiveness portion, it's only looking at 8 weeks worth. So right there, you have about, so if they got 2.5 months that they were originally received the loan for, they're only eligible for forgiveness of about of 8 weeks. So we have that extra 0.5 there. So what we need to go back and look for then is we're looking at their Schedule C, so that we can maximize that loan forgiveness. But unfortunately, so a lot of our smaller Schedule C clients, they just don't have that. They don't have a large number. They don't have a large amount for rent on their Schedule C. They don't have, mortgage interest on their Schedule C, just because they don't, or the utilities, because they don't have a building that they're renting out for that. They're working out of their homes or that kind of thing. So they're not going to have the dollar amount to come back and make up for that extra 0.5 there, that extra that they originally received. So they need to know that on the front end that, it's possible that this extra 0.5%, that there's going to be this percentage here that you're not going to end up getting forgiveness for. And that's okay. They can keep it as a loan or they can pay it back. But I think as long as they know that on the front end, that could turn into an issue. And again, that someone needs to be watching that closely, that if we have the opportunities to pay the, go ahead and pay the rent and that kind of thing, it's not the time to put off your rent payment on your Schedule C until later. That's not the bill that you want to push off until later. So just keeping on top of those kind of things to make sure that we are maximizing.
And then I would just say to make sure that they make sure that everybody on here makes those self-employed individuals aware. We're still receiving clients every day, new clients, not our clients. We have done our dead level best to make sure that everybody is aware of the self-employed. I received a working with a new client yesterday that was not aware, and there's a $10,800 loan that we're working on right now that's in this client making or breaking his business, and he had no idea because of the name of the program being PPP and they refer to it as payroll. People just in the news cycle don't understand it's for self-employed as well. So make sure that they're aware. And if you don't have anything else, we'll turn it over to Gail for whatever questions you have. You're still muted, Gail.
Deanne Murray has a question, so I'm going to unmute her.
Okay, my question, can you hear me?
I can, yes. And also, y'all, she is unmuted and she is also here. I hope I don't throw her under the bus, but she's available for questions as well.
My question relates to the payroll tax credit for self-employed individuals, because Melissa talked about the payroll tax credit for employees and how you can get that through not paying your payroll tax. But aren't self-employed, are they eligible for that as well by not having to pay those estimates?
You're correct. That's one thing that I didn't address. Self-employed individuals are also eligible for that same the same payroll tax credit that that the traditional business is with the traditional employees. So normally how a self-employed is paying that is through estimates throughout the year and then kind of a true up at the end of the year. But yes, so they are eligible to reduce their estimates for basically the same amount that would go into it, and they would be eligible to reduce their estimates for that amount. And that's a little bit of a bigger calculation. It gets, I would definitely say to get help from a CPA or accountant, whoever you're normally working with, to help you make that calculation to make sure we are getting the correct amount of estimates paid in, but definitely so that you're holding on to as much cash as you can right now during this time.
And I have one other question, if that's okay. I know, like the sick leave and the family leave, that first option is like if you're under a federal or state quarantine. What we've had in the last couple of weeks, does that not qualify for that? You have to basically be either sick or staying home with a child that's not in school.
So if you're referring to the state stay-at-home order where a lot of the businesses were closed down unless they were considered non-essential, is that what we're referring to?
Yeah, I see what you're. So if they're a business that's non-essential, then they would fall under that category of being.
Right. I have been asked that question. In my opinion, yes, that is going to fall under, you're under a state quarantine at that point. You're under a stay-at-home order. So I would say if you're having people that are having to stay home for that it would qualify for that payroll tax credit.
All right. Thank you.
Mm-hmm.
Do we have any other questions?
Yeah, I have a question. This is
All right,
Ron
Mr. Joe.
Siva.
I was going to ask Ms. Johnson about the EIDL. We finally got some money through it the other day, but we had previously gotten the PPP loan. Although I applied for those in reverse. But how am I going to be affected with what I got from EIDL in regards to that being now associated with the PPP loan?
As you know, the intent was to get the 10,000, up to 10,000 out initially. And when that didn't happen, there has not been, and I agree with Jamie, there have not been any indication how that would happen. But you are referring to the up to 10,000. You haven't received an EIDL loan. Is that correct?
No.
So what we're seeing with the people that receive the up to 10,000 and then receive the EIDL loan, the EIDL loan is just in the amount and not including the 10,000 right now. So we have to assume, and you know what that means about me and you, we have to assume that the loan is just for the EIDL portion, the loan portion, and not up to the 10,000. So the up to 10,000, they are still, SBA, even as of yesterday, still refer to that as the grant. And they're using the word grant. And you can see from your own credit, they didn't pull your credit to dump the up to 10,000 in your account. But if you are getting the EIDL loan, they actually check your credit, a hard pull before making that offer to you and you accepting it or not. So the 10,000 is in that quasi part. And Jamie's right. There has not been any guidance once it was administered backwards to the intent of Congress. And they're trying to address, that's not the only issue that was opposite of what happened, of what was the intent in the beginning. And as we have flown through this, and when I say flown through it, I feel like we're still drinking from a fire hydrant because of what's coming down. But in that, it has not in any way given us any more meat in that specific question. They are just trying right now to get money out, money out, money out. But we are seeing the EIDL loans as well, not just the up to 10,000.
You're saying EIDL loans, you're referring to a loan through the SBA at that 1% interest rate, right?
Yes, sir. When you applied for the 10,000, you actually applied for a full loan. Remember, revenue minus cost of goods sold divided by 2. That was the amount that loan was made, that application was made for. And then at the bottom, or the last thing, you just checked off, do I want that up to $10,000? And on the application, it said grant. Yes. The whole idea was that it would have been first. Since it was not, we are not seeing, if you will, the interaction. If you were to diagram it, diagram the act, it actually intersects, but we're not seeing that since the actual implementation. Once they implemented it, it was not intersecting at all, and they have not come back with the exact. So our point has been, spend it according to EIDL. And I even talked to a client yesterday, and she just like, I'm not comfortable. I said, then spend it on payroll. Okay, spend it like it was PPP. And if you spend it like it was PPP, then it's forgiven at both ends, and you won't have to worry about it. But there are people that are saying, I've got my PPP, so therefore I need the EIDL for what EIDL was originally for. And then we go back to the most it can be is 1% interest. And you can't, and it's no personal guarantee, no collateral. So where else are you going to get that? So we are saying, based on, go back to Melissa's point on cash flow, cash is king. So evaluate what you actually need in order to determine how to use that money. Because it is broader if it's used as a loan, and on the back end, if they come back on you for any reason wanting you to pay it. It's still a very good cash flow product, so to speak.
Okay, one more question. I'll be quiet then.
No.
Okay. Now, my understanding with that SBA loan is you can borrow up to 25,000 with no collateral.
No, sir, it'll actually go up to 200,000.
Up to 200. Okay.
Yes, sir. It might be 300.
Just mail me a check.
Sorry?
No, I said just mail me a check, but
Yes,
no,
sir. Yes, sir. Well,
I don't want to borrow
is-
that much money, but does this amount of money I got as the grant, does that apply to the total? Say I wanted to do 25,000.
We're not seeing that apply to the total.
Okay.
But realize I had a client close on 192 last week. And in that, it did not include the original, and it was also at 1%, no collateral, no personal guarantee. And that is
And it was
my
over 25,000?
Yes, sir, 192,000.
Oh, 190. Okay.
Yes, sir. The 25,000 got bumped in there somewhere,
Okay.
and that needs to be out of your mind as far as what we're concerned, because they're going to, after the 10, up to 10, after that, that loan was made for, in your case and everybody else's case, according to a formula, and that formula was revenue minus cost of goods sold divided by 2.
Right.
So that would be your offering. When they come back to you through an email that is sba.gov, and I would just like to once again make that warning of checking that email for sba.gov, because I actually had a person not even return my phone call because my name was Yo, because there is a company called YoGov, and they are charging individuals hundreds of dollars for basically the same thing we do for free. And in that, there are many different renditions of emails and that sort of thing that are just out there trying to get to our clients, get to our businesses, and run up bills. But that is not, we need to make sure that everyone is looking for that email that is sba.gov at the end of it. Some of them are coming in disaster something at SBA, but it's the sba.gov specifically. And then I would personally check that to make sure that that was legit before I moved forward with whatever it said. But in that, whenever you receive the offering for the EIDL, that offering is based on your application, and you can accept it or deny it. But we have been telling everyone you need to accept it because you don't know what you're going to need in the future. And this is a loan for 1% without any personal guarantee up to the 200,000.
Thank you very much.
All right.
All right, Jamie, where's
Mary
my
Lovin
hard
has a
question?
question now.
Okay.
Trying to unmute her. Mary Lovin, are you there?
I am. I'm probably like a CPA nightmare here. We keep books. I'm the one that keeps our books. We have 1099 people because we do mostly labor because we're a flooring company. I have not applied for any of these yet because I'm just scared of how to keep the books. I mean, anytime I've ever had an audit from like an insurance company or anything like that, they say I have exceptional books, but I still am just a little nervous about, you know, trying to file for one of these. Just due to that, does anybody have any guidance, or, you know, have you guys helped anybody that has 1099 people do one of these loans?
Mary, this is Yo, and 1099 labor is considered in these programs that they are in business for themselves. So every 1099, even though it's coming from a single source, they are considered self-employed. And you go back to everything that's been discussed, and they are eligible to apply for the PPP for themselves. And you, as a business, you cannot include them in the calculations in these programs because they are not employees. I I have been, I don't know how to say this. You didn't say it, but many people will go, I have 1099 employees. And I went, the IRS does not have that category.
That's correct.
Okay. So in this world, 1099s have no place in your application. They would have to apply for themselves. And so therefore, depending on how many employees you have, or if you're just self-employed yourself, then absolutely. The PPP is there and the EIDL. We have seen self-employed people get their $1,000 because they had one employee. They were self-employed. And it's $1,000 that they didn't have. The EIDL, you cannot apply for it today. That is still closed, but you could definitely apply for the PPP.
Okay. Thank you so much. I do have one other question.
Anybody else want to add anything to that for Mary?
Well, I was just going to say, I agree with Yo. Obviously, that's something that we fought, and we fought it with the banks. So if a banker tells you otherwise, they are incorrect. We have disseminated the law to various banks. We have been the authority for various banks on it. So please don't listen to what's in the news cycle or the banks if they tell you contract labor can be included.
Yeah, there's been a lot of confusion about that, and yeah, it's not includable.
Yeah.
Okay, and that's what I thought, and that's why I haven't applied yet. I was even trying to tell another friend who has the same situation, like, don't do that just yet. Do not apply for that yet. You may have to pay all of that back. And you know, I think she went ahead and applied, but anyway, that's here nor there. I appreciate it. I do have one more question. I have a 19-year-old son who filed a tax return in 2018. We haven't done 2019 yet. He was 1099. He paid in $675 to federal and like $330 or something to state. He didn't receive any money back, so of course they don't have his bank information. Is he going to receive a $1,200 check, or is he not going to receive that stimulus for $1,200?
Okay, I can speak to that. So did you claim him as a dependent, or he claimed himself for 2018?
And that's where I'm confused. I don't remember. I think for insurance purposes, we did it as a household, but I do not think I claimed him as a dependent, but maybe I did. So should I look back at the tax?
I would look back at that, and then if you did claim him as a dependent, I would have him go ahead and file his 2019 pretty quickly with you not claiming him as a dependent.
Okay.
And then, so let's go back and assume for a minute that you didn't claim him as a dependent for 2018 and he claimed himself. Yes, he is eligible for that $1,200, but since he did not get any direct deposit, he would be getting a paper check, but he is able to go online to the IRS to that Get My Payment link, and he can put in his direct deposit information. I personally did that yesterday because I didn't a refund for 2018 and I haven't filed my 2019 yet. So I went onto that link yesterday and I was able to put in my bank account information, and so my payment should be direct deposited now. So I would recommend that he do the same thing.
So I did that yesterday, and it's saying that they just have no record of him.
So they are running. That could be part of it, or part of it could be that you did claim him as a dependent. That would definitely be something. It's a little checkbox at the top of his return, so I would suggest he go and look at that and make sure whether or not he marked that he was a dependent or not. And if he did mark that he was a dependent, then I would say ASAP he needs to file that 2019 return with you not claiming him as a dependent, and then at that point, hopefully he would get in line quickly enough that he would get that $1,200 payment.
Perfect. Thank you guys so much.
Mary, I have one other thing. Was he a 1099 in 2019 as well?
He was.
Then he is eligible to apply for the PPP at his bank also.
Oh, that's fantastic. Okay, I'll tell him that.
Yes, because go ahead, Melissa.
He's going to need that Schedule C, though, for that 2019.
Yes.
Okay.
Schedule C filled out as well. And then he would be eligible for that PPP based on that net on that Schedule C. But yes, I would definitely agree with her that he needs to go on ahead and file that as well.
Okay, awesome. Thank you, thank you.
Gail, one of the
All right, anybody
items,
else have any
go
other
ahead and-
questions?
I'm sorry. Just a statement, Brooke.
Okay.
One of the items that we're going to run into for everybody on here that they're going to see, we're sitting here and it's April 30th. The law says 8 weeks from funding. We have many people that are not funded at this point that are going to be funded. There will be, the 8 weeks will run out, okay, before their full 8 weeks. June 30th is going to arrive before their full 8 weeks expire. So what are they going to do about that? The answer is we don't have an answer, okay? We're waiting on Congress. SBA is going to be waiting on Congress. SBA can do nothing other than what the Congress tells them. And the banks can do nothing other than what Congress tells them. The Congress has some cleanup to do. They're aware, but until they get on the same page, that's where we're left. We're going to do our best to maximize it for June 30th, but just realize we're hoping that there is some new law that comes out to clean this up so that we can actually do the full 8 week period.
Yes.
And I almost feel like they'll have to, but we can't know at this point until they actually do. So.
If no one else has any questions, thank you so much. Any other questions? Last call before we head out.
I don't. I'd just like to say thank you to Gail for what the chamber's doing to get the message out to people, for recording it. Hopefully we can send it out to some additional people where they can understand what's going on. And then thanks to Yo for stepping in. I know that she is pulled
Someone's raised it.
1,000 different ways right now. I feel it. So
I have no hair left. I have no hair left.
thanks for stepping in, Yo.
Thank you.
Yes, thank you, Yo. Thank you, Melissa. Thank you, Jamie. And thank you for everyone for being on and asking these questions so we can get more information. And again, we're here. Don't hesitate to reach out to us if we can do anything for you guys. Thank you for joining us.
Thank you.
Thank you.